It's funny, the concern about that headwind didn't really come up very much in the conference calls with analysts for the likes of Alphabet or Amazon, but it's a continued concern, certainly for many investors, it would seem. What's your take at this point as these investigations get underway at both the FTC and the DOJ?
Well, I'm just totally fascinated by this for several reasons. One is that this is really a sea change in how the federal government is looking at antitrust enforcement. From the old, very market-driven, University of Chicago, rigorous economic analysis approach to a much more, let's bring back Louis Brandeis, the big is bad, we can't have these concentrations of power. So that's, number one, very interesting. But secondly, the nature of these monopolies, if they are indeed monopolies, is completely different from the old trusts that were broken up back in the Brandeis era. And I think that's because in cases like Facebook, Google, Amazon to some extent, the monopolies do not come out of old industrial economies of scale, which is like the old steel or oil things. It's the network effect, which at its simplest is like an auction. You want to be on the site with the most sellers if you're a buyer, and you want to be on the site with the most buyers if you're a seller. eBay is a great example of that. Facebook, if you're using it, you want to be on the site where all your friends are, and your friends all want to be on the site where you are. So there is going to be a natural monopoly here. And I don't think the structural relief they're looking for, breaking up, is going to solve that problem. From investors' point of view, also, I don't think that Facebook divided into Instagram and the social network is all that much less valuable than it is together. So I don't think it's a great...
But do you not think that there's an antitrust case to be made? I mean, you'll be following this closely, I would assume, in the months ahead as we get more data from both the FTC and the DOJ. Do you not think that there's a market power case to be made, that innovation is stifled, that certain anti-competitive actions are taken by these enormous platforms that prevent others from actually participating?
Well, I'm very interested in seeing whether there is conduct that they can demonstrate has, in fact, suppressed innovation or has harmed consumers in some way. But purely from a structural standpoint, my argument would be if you have Facebook controlling both, say, Instagram and Facebook, you break those into two, Facebook, Instagram. Instead of having one company that owns two monopolies, you're going to have two separate companies with two monopolies. You're still going to have a monopoly. I don't know. I mean, maybe Snapchat can, nip at Instagram's heels. Maybe there is some competition that would form there. But again, I think the problem is the network effect. Let's say you decide to break the Facebook into two. So suddenly, half your friends are on a different social network than you are. So then what happens? Do you subscribe to two? Do you use two? I don't think so.
Are you saying this is specific to social media? Because we have competition in cloud among the big players, and we have competition in streaming, or getting it, among big media players.
I think it's true of any business where you have this network effect, and the network effect it has arisen with the internet. I mean, it has made it possible to create these businesses that depend on scale and where both sides of a transaction want to be at the platform with the biggest distribution, the biggest exposure. It's true for advertisers to some extent as well. That's sort of a numbers game. So I think it's a unique phenomenon to the digital age, and it is one that I'm going to be very curious to see how these economists and antitrust experts address it, because it's going to be very tough, I think, for any kind of regulation to overcome the powerful social and economic forces that are driving people into a common site here.
They're all different.
Yeah,
Jim.
they're very different.
Totally different. So is there one more than the other that you think is more vulnerable to these types of questions and ultimate action?
Well, the traditional way of looking at monopoly power is profit margin. If you have a monopoly, you're charging monopoly prices, you should have very high profit margins. Amazon has very low profit margins. Now, you could maybe argue that they're using profits in the cloud to subsidize their retail business. That's a tough argument to make because, who benefits from all that? Like the consumers, are you going to really say they should be paying higher prices on Amazon, not get free delivery? I don't think people are going to want to hear that. But Amazon, from that standpoint, is the safest here. And at the other extreme, you're going to see Facebook, Alphabet just had very good earnings. They've got margins in the 20s and 30s, but, so does Coca-Cola. It's like, this isn't like off the charts. We're not looking at 70%, 100% margins, which would, truly indicate some serious monopoly power. So I don't know. I mean, I wouldn't be that worried at this point. I'd be monitoring this closely. And here's another interesting issue with this set of enforcement actions is, of course, the White House and Trump. He's tweeting all the time about it. You know, the traditional view was the chief executive should not be commenting on companies that are under investigation by the Justice Department. He's made it clear he doesn't like big tech. He thinks Google is, unfair. He doesn't like Jeff Bezos. He went after the Time Warner deal after saying, all kinds of bad things about CNN. And the problem with the old antitrust thing, big is bad, is it was always, well, which big is bad? It leaves plenty of room for purely political picking of favorites, which is one of the reasons that the Brandeis thing went away in the first place.